Modest gains on Thursday, and that's in lighter trading ahead of that U.S. Thanksgiving holiday. This is following the rebound in energy and tech stocks on Wall Street, but analysts did caution that the tepid uplift in New York on Wednesday should not be interpreted as a sign of the start of a recovery from the recent damage on the global stock markets. Investor sentiment does remain fragile following the volatility that has swept markets, and that's since October particularly. Now, while the OECD has warned that world economy has peaked and faces a slowdown as it confronts the Trump administration trade war and tighter monetary conditions. It was a mixed bag out in Asia today by close, with Tokyo's Nikkei gaining 0.7% at 21,646 points. The Hang Seng rose fractionally, ending the day at 26,019, while the Shanghai Composite edged lower at 2,645 points. Over in the United States, the S&P 500 ended the day higher on Wednesday after a brutal two-day sell-off led by a rebound in energy and technology shares. But the market faltered towards the end of the session as Apple's shares surrendered gains ahead of the Thanksgiving holiday. It was a flat end for the Dow Jones Industrial, while the S&P 500 gained 0.3% to 2,649. The Nasdaq Composite added close to 1%, ending the day at 6,972. The market there, as you can tell, a little bit mixed across the board. We haven't really reached the bottom. It may even be bear market out in the United States, according to Morgan Stanley. But is it really? Perhaps some of the stocks certainly are. The likes of Apple not doing so well. So a lot of the FANG stocks out in the United States, the likes of Facebook, Amazon, Apple, Netflix there as well, and even Google, seeing themselves in recovery territory particularly. Let's unpack, however, how the European markets are faring, and then we'll turn our attention locally. Around 13 Rand and 88 cents for a US dollar. Clearly the cabinet announcement, or the announcement of a new cabinet, in some ways or other, the replacement of Edna Molewa and Malusi Gigaba a little bit later on, isn't affecting the Rand too much, and still some positivity in there, clearly, as the market dissects what is happening today. Let's unpack the remainder of the market now. I'm joined by Gerbrand Smith from NEF here. Thank you so much for joining us, Gerbrand. It's been a market picture that has allowed for a lot of negativity, yet some positivity comes through. We see the positivity mostly in the Rand, while the rest of the market is sort of trying to find its footing. What exactly is going on now?
Yeah, look, it's a difficult space to be in at the moment. We had lots of stocks selling off, especially emerging markets, over the last year. Looks like they may be finding a bit of a bottom here, and it looks like the Fed is probably going to pause. We have lots of trouble in the global markets at the moment. You saw the yields on the 10-year treasuries coming down from about 320, 330 recently, which was the fear around there across the globe, and that's come down to close to 3% at the moment. So it looks like they might pause. If they might pause, and they do pause, I think they're sitting next week. That would probably be good for emerging markets. But let's see. We'll hope and see and wait.
It was a big deal when they got to that 3% mark, and I think the market just sort of expected things to explode, perhaps out of proportion from there. But it just seems that it's not as good as people may have thought out in the United States particularly, and things coming down ever a touch. It's not just the technology stocks, however, that suffered. It's even the oil stocks, right? And that oil price going down quite significantly. Where does one then find value, whether it be internationally or even on the local front?
Yeah, look, developed markets internationally were probably not the cheapest place over the last year. So we weren't there, and I think most fund managers were starting to avoid some of those shares. They didn't come back, and the valuations are very rich if you look at especially cyclical adjusted PE ratios on the S&P, etc. Probably the third most expensive in 150 years over the last year, so probably avoid those. And you're seeing some of those being unraveling at the moment. So a lot of hype around those shares, the FANGs and so forth. And across the globe, you saw that in the Chinese shares as well. But yes, the emerging markets has been hit very hard over the last while, especially about a year now. We sitting in South Africa with shares that's been very cheap. Look at Tiger Brands, for instance, down 40%. You're sitting with British American Tobacco down 50% from 960 a while back. They're 470 now, trading at single-digit P's going forward. So yeah, there is some value emerging, and the theme over the last year was especially locally, but abroad as well, with yields rising and normalizing globally. Companies with a bit of debt on their balance sheets were seriously hit over the last year. Yeah. Especially the acquisitive guys. We had the Steinhoffs and we had all of them raffling out. So a lot of people avoiding them. And I think there is still good companies with a bit of debt on their balance sheet, but quality companies that can pay them off. We're looking at Aspen, looking at British American Tobacco. Some of these fallen euros, I think, is getting very cheap at the moment.
Yeah. You heard the interview with Tiger Brands there with the CEO, Lawrence McDougall. Your thoughts on the company? Is it actually set to turn the corner in some ways? Yes, they had the listeriosis outbreak, of course, which affected things quite dramatically. But can they actually turn the corner with regards to the fast-moving goods segment? It is under strain. Consumers are finding it difficult to afford things, and clearly private labels are taking over more than one may have even liked on their front.
Yeah, I think a lot of consumers are actually shopping down one bracket, and you're seeing that in the numbers. Normally these guys do come out on top. It is probably the worst 3 years that these food guys actually had over the last 3 years in South Africa in a very long time. They don't like deflation. We had that in Pioneers Foods numbers as well. They were hit with the drought a year earlier, so their numbers look okay, but if you look at the volumes and the declines and so forth, they're sitting with the same problems. They actually look a bit cheaper for me, but they probably don't have all the A grade or the A brand names as Tiger Brands does. So yeah, if we look long-term wise, it probably offers value here. But as you said, it needs to have a recovery on the local front consumer-wise. We're sitting with MPC this afternoon, which might be a very difficult one for the governor.
Very quickly as well, it does offer, you just said, a chance for, cheap buying of stocks right now. How relevant is that right now to the market? Did things run a little too hard, and now is the fine time for that correction where you can re-get into the market?
I think so. If you're a long-term investor, you do your homework correctly and you buy shares that's now been hit like 30 or 40%, and it's decent shares with decent indestructible business models, like a Tiger Brands, it is probably time to start acquiring some of them. But I would always say have some dry powder left. If the US does pull back more, which is not impossible, still expensive, then we're going to probably struggle to find the bottom.
MPC as well this afternoon, your expectations? It's a little bit split down the middle on this one, isn't it? 5.1% with regards to CPI for October. That doesn't necessarily impact things, quite dramatically, but it does start the 18-month process for inflation expectations.
Yeah, it's very difficult. I mean, the bunch who looks at inflation says 4.5% is the new
it would seem
barrier.
So.
And if you look at what bonds were doing a year back, a bit different now. So on that front, you'll probably want to hike 0.25, and I think half of the economists are going that way. And on the other side, we have the consumers seriously struggling. We have growth in GDP numbers struggling in South Africa. So on that front, it's probably not the right thing to do at the moment. So I'm going to sit on the fence and go with no change. Okay. But anyone is possible.
Yeah, certainly is. Well, really appreciate your time, Gerbrand Smith there from NEF here as we unpack the markets. Of course, we are expecting to see the MPC deliver that announcement at around 3 o'clock. It is the same time, of course, as President Cyril Ramaphosa announcing two members to at the very least, those two members to take up the 2 spots available in environmental affairs and home affairs as well, following Edna Molewa's death and Malusi Gigaba's resignation. How that will play out onto the rest of the market, we'll find out a little bit later, and I will be here to give you all of that. More business news after the